Did you know since Bitcoin's first major bull run in 2013, Bitcoin is up 47,000%, while at the same time, for inflated adjusted returns, gold is still below its historic peak in 1980 of $2,472. But you know the old saying, historic returns are no guarantee of future returns. So the question every investor wants to know the answer to right now is Bitcoin really a scam? Is it a fad? Will these life-changing returns continue in the future, and will it outperform its biggest rival, gold? Or are we heading into a painful recession, depression, currency debasement, and hyperinflation that will finally break the bank's ability to keep gold's price suppressed and have that huge breakout we've all been waiting for the past 10 years? Well, these are the questions we are going to answer in today's video. Dive deep into the charts and history of both assets to see what really will make us the most money and life-changing wealth moving forward. Okay, everyone, let's not waste any time. Let's get straight into it. So if we're going to compare both assets to see what will outperform, we first have to know what makes the price of gold and Bitcoin go up. So let's start with gold. Now, like any investment, it is simply supply and demand. More demand from central banks and physical backed ETFs higher than the production rate of miners can send the price surging. Now, gold is priced in dollars, so when the DXY goes down, that can be bullish for gold. Moreover, gold is a traditional inflation head, and during times of high inflation, commodities like gold tend to rise. And lastly, during times of uncertainty or a risk-off environment, like during a recession where stock and real estate returns are lower, people tend to invest in gold to protect their wealth. So that's just a few indicators of what makes gold go up. Now, what makes Bitcoin go up? Again, like gold and every asset, it is simply supply and demand. Now, with Bitcoin, every 4 years, there is something called the halving event, where the reward miners get paid for mining Bitcoin get dropped in half. Right now, the reward miners get paid is 6.25 BTC. But in 2024, that reward will get dropped to 3.125 BTC for every 10 minutes. That means right now there is roughly 900 Bitcoins being created every day, or 228,500 per year, and that is going to be dropped in half to around 164,000 per year. To put that into perspective, MicroStrategy owner Michael Saylor owns 121,000 Bitcoin, and Tesla owns 43,000 Bitcoin as well. And it's looking like they're going to add to these positions in 2023 and 2024, so that could swallow up all the new supply that's coming, especially since we've seen huge amounts of adoption from institutional investors and other countries making it legal tender. Now, when we look at Bitcoin's short history, we can see a trend here of a 4-year cycle around the halving event. In 2012, when they had the halving event, the first halving event, we had the bull run of 2013. And then when they had the halving event in 2016, we saw the massive bull run of 2017. And the most recent bull run in 2020, we saw the most parabolic moves where Bitcoin went from around $5,000 all the way up to a peak of $69,000 in 2021. So what Bitcoin's short history and data is telling us is they're saying that right now is a great accumulation phase to get ready for the next parabolic moves and the next bull run that will be around mid to late 2023 and 2024, because it normally peaks 12 to 18 months after the halving event. Now, also many people say Bitcoin is worthless, but like gold, it takes huge amounts of energy, computer power, and software to create Bitcoin. And most miners estimate that it costs them around $7,000 to $11,000 to create just one Bitcoin. So that means Bitcoin is worth at least the production price it costs to create Bitcoin. And if Bitcoin drops below this price, simply miners will stop mining Bitcoin because it won't be profitable, just like what happens in the gold industry. Now, the challenge for Bitcoin is it also has to compete with the other 18,000 cryptocurrency projects. In 2016, Bitcoin had about 80% of market share or market dominance in the market cap, where now it has dropped to around 42% since there have been so many great up-and-coming projects. But of course, Bitcoin is still king right now, and the market revolves around what happens with Bitcoin's price. Now, also because Bitcoin is a new industry, another thing that has a huge impact on Bitcoin and the cryptocurrency market is regulation. Sure, many of you saw in 2020 and 2021, we saw China ban Bitcoin about 123 times, but more recently, US Treasury Secretary Janet Yellen has started to warm up to the cryptocurrency sector. Who knows if there's been some lobbying there or some pockets filled in the shadows. Now, because Bitcoin is very speculative and it's easy to manipulate with a lot of new retail investors, the price does get affected with a news cycle and also public figures or famous investors like Ray Dalio or tweets from CEOs like Elon Musk. But as the market cap approaches $1 trillion and the market matures and becomes bigger, it's going to be harder for these news articles and these public figures or famous investors to manipulate the price. Now, while we're on the topic of Bitcoin, you're probably thinking, what is a reputable, safe, and cost-effective exchange or app to buy and sell Bitcoin and other cryptocurrencies? Well, that's where I'm proud to work with today's video sponsor, FTX. I've probably seen many other YouTubers and iconic public figures like Tom Brady and Stephen Curry partnering with FTX, and that's for good reason. FTX is trusted by over 6 million users and is one of the largest cryptocurrency companies in the US. It's a safe and regulated way to buy or sell Bitcoin, Ethereum, and other digital assets. And the reason I love using the FTX app is because it's much cheaper than other exchanges. With no fixed minimum fee on transactions where other platforms normally charge minimum $2 to $3. There's also no ACH transaction fees, and you can also set up recurring buys directly from your bank account for dollar cost averaging strategies like I do because nobody can time the market. They also have a great crypto-friendly debit card where you can spend cryptocurrency at millions of merchants worldwide. They also have a great section in their app where you can stay up to date with the latest news in the market so you can act quickly, and they also have a news feed where you can stay up to date with the latest cryptocurrency projects. If you're wanting to download the app, I'll put a link in the description. When you use code MICHAELCOWAN, you can start earning cryptocurrency for every trade over $10. Thanks for FTX for sponsoring this video. Now, back to the content. Okay, so now that we know what makes the price of gold and Bitcoin go up, you're probably wanting to know is what kind of investment environment or macro environment are we in right now, and what will outperform in 2022 and 2023. Now, just a quick disclaimer, nobody can time the market, and there are so many black swan events that could happen or unforeseen events that could happen that could manipulate the price. But as investors, we still have to do research and fundamental analysis to know what will be a good investment for our situation. So first, let's talk about my expectations for how gold will perform in 2022. And just a quick recap, what we said that causes the price for gold to go up is high inflation, risk-off environment, low supply coming onto the market, central banks buying. All these things is what makes the price go up. Well, right now we have high inflation, so we can tick that for what is bullish for gold right now. But what we are moving into the market as I'm recording this is a risk-on environment. A lot of fears of what's happening with Russia and Ukraine has come out of the markets. There was a big fear that NATO and the US could get involved, but that is now looking very unlikely. There's also been huge amounts of fears of what the Federal Reserve is going to do with their rate hikes, but we have now got more certainty from the Fed of there will be 7 rate hikes in 2022. So we'll be lifting the federal funds rate to about 2%. But with inflation at 8%, unless it comes down, it is still going to be in real terms negative interest rates. But the Federal Reserve has said if inflation doesn't come down, they will be willing to act. And there has been speculation that there'll be a 50 basis point increase in May. Now, obviously this will be bad for gold, but it'll also be bad for Bitcoin as well. Now, third, what are central banks doing right now? In 2021, they were big buyers of gold, buying about 640 tons worth. But with the most recent data we've got for the first quarter of 2022, they've actually been net sellers. Now, we have a look at this chart here. We can see which countries have the biggest amount of gold. We can see the US coming in at number 1 with 8,100 tons, then Germany with 3,300, Italy and France at 2,400, and Russia with 2,200 tons, and China 1,900 tons. I wouldn't mind getting close to that amount. Fourth, what would really send gold to the moon would be a period of high inflation and recession, which is called stagflation. That's where we enter recession, but inflation is very high. What we can learn from history is during 1973 and 1980, the stagflationary period then, gold went up 10x from around $65 an ounce to a massive $650. So definitely some good returns there. And how the stock market performed, during that same period, the S&P 500 went from a peak of 860 in 1968 to 320 in 1982 and didn't fully recover until 1992. So people's stocks don't only go up, but if you did buy the mega dip there, you would have made some sweet gains. Now with the yield curve inverting, the Federal Reserve going into a rate hike cycle, consumer sentiment falling, debt at record levels, a stagflation recession is looking like a real possibility, which would be bullish for gold. And I think we definitely passed the inflated adjustment returns of the peak in 1980 of $2,472 an ounce. So things could possibly be bullish for gold, but how bullish is things looking for Bitcoin? Like gold, high inflationary times make speculative assets like Bitcoin go up. Now, for example, if the economy weakens and the Federal Reserve does a U-turn and doesn't start lifting interest rates and starts printing crazy amount of money again, and we have a huge risk on environment, Bitcoin would massively outpace gold's performance. Also, Bitcoin is well below its recent all-time high of $69,000, so it is a much bigger discount and has much greater possibility for greater returns. So this is making a great opportunity or a great accumulation phase in 2022 to get ready for the big bull run that will be coming in 2023. Because again, 6 to 12 months before the halving event, which the next one will be in 2024, that's normally when we see things start to get really bullish for Bitcoin as people start to speculate that the low supply will create higher prices. Now, like I said, a stagflation recession will be bullish for gold, but if we don't enter a recession and the economy booms, people have their jobs, they start spending money, they start to invest in more speculative assets like stocks and Bitcoin, like we saw in 2020 and 2021, well, that will be very bullish for Bitcoin. And again, I think Bitcoin will massively outpace gold. So to decide which will be the best performing asset, well, people, we have to look at the cold hard facts and the cold hard numbers, because the numbers don't lie, the numbers don't have emotions, the numbers don't have feelings, and they don't care what your bias is. So again, looking at the data, Bitcoin is up 47,000% since its most recent bull run in 2013 when it was around $100, where gold is only up 60% during the same period. Now again, Bitcoin was very new, so of course it's going to have much higher returns, but Bitcoin's market cap is still well below gold's, where gold market cap is around 12 trillion, where Bitcoin hit a peak of just over $1 trillion. But what you have to know is comparing gold and Bitcoin is like comparing apples and oranges. They're not the same thing. So what I'm doing and what I think will be a great strategy for investors is, newsflash, how about you just own both? Seriously, what I see in the investor space is so much black and white thinking. Either you're all in gold, or you're all in Bitcoin, or you're all in stocks, or you're all in real estate. People, there's a time and season for every asset class, and if it makes money, it makes sense. And this way, by having both gold and Bitcoin in your portfolio, you're protected from the downside risk of, say, we do enter a painful stagflationary recession, well then gold will boom. But what happens if I'm wrong? Or what happens if all these gold investors that are predicting Armageddon, what happens if it doesn't happen for another 10 years? Well, then you still have the upside from much better performing assets like Bitcoin. So what this simply means is gold and Bitcoin both have their pros and cons, but they do complement each other. For example, gold is physical. You can hold it, you own it, nobody can take it, but Bitcoin isn't. But with Bitcoin, it's much easier to transact and transfer, unlike gold, which is hard, especially if you want to take $1 million of gold overseas when you're trying to flee the country. Gold is also very expensive to store, where Bitcoin is cheap. Bitcoin is much rarer than gold, with only 18 million coins in circulation, compared with gold that has 2.5 billion ounces. And to answer the question I always hear about Bitcoin from gold investors, they say, well, what happens if the internet goes offline? First thing, the whole country would enter in chaos and your investments will be the last thing on your mind. But with Bitcoin, you can actually store it offline with cold storage. So this is why I always preach diversification is so key, because that way you can protect yourself from a downside scenario, but you can also protect yourself from a possible melt up in the markets if the Federal Reserve does a U-turn and starts printing more and more money, and we need an asset that outpaces inflation, because unfortunately, gold hasn't been keeping up with inflation adjusted returns. So what I'm doing, and this is not financial advice, but I actually have 35% of my portfolio in gold, 35% I'm allocating to Bitcoin, and 25% stocks. And then I have my own house, so I have exposure to real estate as well. But that's just my thoughts, everybody. What do you think will outperform? Let me know down below. Thanks for watching, everyone. I'll see you all in the next video.